Hi, it's Brad Simmons from Ocean Consulting Services with today's topic, which is innocent spouse. Do I qualify? So let's review the highlights. Liability for taxes on a joint return is considered joint and several. The IRS can pursue either spouse for 100% of the tax. Of course, they can't collect more than 100%, but they can pursue collections against each person who participated in the joint return for 100% of the tax. The Innocent Spouse Program is a program designed to provide relief from this joint and several liability in certain circumstances. It's not automatic. It requires an application, very similar to what happens with an offer in compromise. So let's run through an example. We'll continue on our example from the last video where we talked about Larry and Martha. Just to review, Larry was an employee. His withholding more than covered his individual tax liability. Martha was self-employed. She's required to pay estimated taxes. In 2021, they file a joint tax return, but Martha hasn't paid any estimates, so there's a tax due with the return. I mentioned joint and several liability, so Larry is 100% liable for the entire amount due on that tax return, even though on an individual basis he would have had a refund. He may qualify for the Innocent Spouse protection. What is the Innocent Spouse Program? As mentioned, it provides relief from this joint and several tax liability. And as I mentioned, it's similar to the Offer in Compromise program. The IRS is not required to grant innocent spouse relief. It's really based on facts and circumstances, as we'll get into in this video. The general view of the IRS is that everyone has an individual tax filing obligation. There are certain people, spouses, who elect to be included in a joint return, and the IRS view is that if you elected to participate in the joint return, then you are subject to the joint and several tax liability provisions. The relief granted under this program can either be an allocation of the liability, or it could be treatment as if you were married filing separately. So there's three different types of relief offered. First one is just innocent spouse relief. The second one is separation of liability relief. And the third one is equitable relief. Let's start with the first one, innocent spouse relief. The debt itself must be due to what the IRS calls an erroneous item. And that means either an overstatement of deductions or an understatement of income. It does not relate to just mere non-payment of taxes due on the return. The main requirement is the spouse who's granting relief can't have known about the item or have a reason to know about this erroneous item. The IRS has to determine that holding the spouse liable would be inequitable. The relief request has to be made within 2 years of collection activity beginning. The relief granted under this provision would be an allocation of the liability where the tax liability is apportioned among spouses and their individual payments towards the liability are considered, which could result in either amounts due or a potential refund. Second program is separation of liability. This requires that spouses either be divorced or legally separated for at least 12 months. Again, the debt has to have arisen as a result of an erroneous item, and the spouse can't have knowledge. Again, the relief has to be requested within 2 years of collections activity beginning. Relief on this provision is you are treated as if you filed a separate tax return. However, no refunds are available. The next relief provision is referred to as equitable relief. Under this relief, the IRS considered, in quotes, all facts and circumstances. The debt either could arise from an erroneous item or the non-payment of taxes due on the return. Relief has to be requested under this provision before the expiration of the statute of limitations, which is generally 10 years. The relief granted is an allocation of the tax liability, and again could result in either the spouse owing money or being due a refund. What factors are considered by the IRS? The IRS did issue published guidance relating to what they would consider for equitable relief. These items also apply to the other two types of relief. Let me just run down a list of those items. Marital status. At the time relief is requested, are the individuals married or not? Economic hardship. Would holding one spouse liable for the taxes result in economic hardship to that taxpayer? Knowledge or reason to know. So again, a very important factor is, did the person requesting relief know of the understatement of income or overstatement of deductions or non-payment of taxes? Also considered is the non-requesting spouse's legal obligation. This frequently arises with divorce agreements. So in a divorce agreement, one spouse may agree to assume liability for 100% of the tax debt. As mentioned in our last video, that doesn't automatically absolve the other spouse from liability, but it's a factor that's considered by the IRS. Continuing on, was there a significant benefit enjoyed by the spouse? In other words, was there a lavish lifestyle that the spouse enjoyed that may weigh against relief? Compliance with tax laws. Is the spouse current with their taxes? Have they maintained compliance since the year that the debt arose? Physical or mental health of the requesting spouse, either at the time the return was filed or when the relief was granted. When it comes to economic hardship, the IRS considers RCP. It's an item we've discussed in the past. That's reasonable collection potential. So it's important to understand your assets, liabilities, income, and expenses. It's the same concept that's used in evaluating and offering compromise. What about the term injured spouse? Well, this is the opposite of innocent spouse. It arises when a joint return is filed, there's a refund reflected, and that refund is taken to satisfy the individual obligation of one of the spouses. So the other spouse is the injured spouse, and there's a potential for that injured spouse to receive a refund, notwithstanding that the IRS would otherwise take the overpayment to satisfy the debt of one of the individuals in the joint return. The IRS will claim the overpayment, so relief has to be requested under the injured spouse provisions. So let's wrap up and conclude. The filing obligation, again, as mentioned, is an individual responsibility for each taxpayer. After filing as an individual, two taxpayers who are spouses can elect to file a joint return, and of course they can elect a joint return when they initially file their return. Once you've elected to file a joint return, you cannot go back to filing separately. So again, rule is filing individually, you can later elect to file jointly, but you can't go the other way. If you do a joint filing, then innocent spouse may be requested. It's not automatic, but with the right circumstances can be very powerful. Thanks for joining us, and stay tuned for future updates. Thanks, bye.